The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. This is the first real trading day of the year, the first trading day of the first full week of 2015. Kalunk, kaplop. Dow's down 241 at 17,591. I want those 17,600 support levels to hold. No. They are being pierced as we speak. The S&P is down at 2,029, down 28. The comp index is down 45 at 4680. You've got gold up 1198. Silver is up at 16,075. 16,075, up 0.30 cents. And this is very important. You've got bonds up $1.04 at 140. Let's see, it's 146 and 30 seconds. That is a big move. It's a breakout, in fact, and it gives an alternate wave count. It could be E in the weekly, but it's the daily that's really important. You've got copper. Copper couldn't hold the gains, just the recent gains. Now at 2.77. I'm worried about that. Actually, I'm worried about a couple of things. I'll explain what I'm looking at in a moment. You've got the dollar. It was screaming higher overnight. Right now, it's pulled back a little bit, but it's still at 91.48, having hit 91.78 in leg. I'm calling this leg C for now. It could be E/C. Everything about it looks like it should be C, with a potential, leg D in the weekly chart. And now this is going to be very, very important because it recycled in the 120-minute chart, A, B, C. I'm going to call this G/C for now. We'll see what happens in the 120-minute chart. And same thing, G/A. Not quite the same thing. In the monthly chart, a spectacular move to the upside. Now, what I need to just say, because I went in for a mixed portfolio last week, and the longs were doing really well, and the shorts, one short position, one option position was doing very well as of the close on Friday. And then over the weekend, the more work I did, the more it looked like that I was going to be correct in saying that there should be an inside buy mode starting very soon in the S&P. What I mean by that is that there was a spectacular move from the low of 17,067 back in mid-December in the Dow, going all the way to the December 26th high of 18,103. I called that leg A. I really had no choice other than to call it leg A. And then the pullback, I thought, with that doji candle of Friday, would pull back and hold the 9-period exponential moving average of 17,660 in the weekly chart. Therefore, I wanted to go long. We did go long this morning, got stopped out for fairly small percentage loss, but in each position. But then it adds up, number one. Number two is it could still happen, but I did not anticipate. Now, let me explain my thinking here. When I was looking at the volatility index, and I made this very clear when I gave a talk last week, and I made it very clear throughout my sessions last week, that if the VIX starts to trade in the 20s, you just have to be very careful. Certainly in the 19s is a warning, but up in the 20s, you just got to say to yourself, whoa, this is not good. And the way it closed on Friday suggested that there was a chance that this morning there could be that early pullback, and then the lows could be made early this morning, and by now, an hour and 3/4 into the first trading day of the week, we should have been off the low, well off the low. And that says to me, don't be foolhardy, Mr. Chapman. Don't take on positions that are now too risky until the weight of evidence changes in your favor if you're looking at the upside. If you're looking at the downside, let me just show you something else here. My Dow Quartet, which I even mentioned this morning that GE has been a harbinger. I expected GE to come off the low that it made this morning and to bounce very strongly. Right now, GE is down 33 cents at 24.74. The weekly chart is making those M patterns, but really failed miserably to get above into the 2650s. And so that's GE. So GE right now is making an H pattern in the daily. A weekly pattern is making the lowercase m pattern, and the monthly has a pattern that you saw in the GLD back when it was coming off the highs. What was September 2009 highs, was it? So that to me was very important. IBM has rallied, but it really looks terrible, both in the monthly and the weekly charts, and the daily does have a kind of a nice feel to it, but that 160, it needs to be up at the 164s before it becomes impressive. If you go to Triple M had done fantastically, but it had gone to a leg C, and that's the only way I can count it in the weekly. And that, when I'm putting all this together, I'm still saying, hey, this would be unlike even the October high of 2008, when the markets went higher in the weekly chart to that leg that had an alternate count and eventually gave the sell signal because it was what I call that double hump of the H, like an M pattern, lowercase m pattern, and then failed. So, but even here, the technicals are still at 91% in the weekly chart of Triple M. So let's go to the final one, which is GE is my shorter-term pilot light, and UTX is my longer-term, more intermediate-term pilot light. It did very well. Now, it's underneath the all-time high of 120.66 peak F top. So that says until it breaks above that, all of this is underneath. When you look at the Grand Canyon, it's under the main peak. So everything is subordinate to that. So I have to look at this and say, until UTX can get back, it's at 113.94. It better hold 113, 112 support, or else it's going to go and retest the recent lows of 111 to 109. Most importantly, what we're looking at is if UTX is able to, in the weekly chart, is able to hold here and start to move by Wednesday or Thursday into the 117s, that would be the best action you could see. So putting it all together, the Dow Quartet is not acting all that well. The VIX index is absolutely saying, hey, stuck here in the 19s, you might be looking at the IWM as you did over the weekend and saying, hey, it's holding very nicely, and it's still holding quite well. It's only down 0.52% when the others are down 1.3 already, percent that is. And it's making that inverted handle and cup, which says that the whole 120 to 122 area, 121.5 area, maybe 122 could be very strong resistance. But at this point, it is actually holding quite well, and it was leading us back up. So got to keep your eye on a number of things. So let me just summarize that if you're looking at different indices, if you're looking at the Qs, which are being impacted, well, the IBB was acting quite well earlier. It's still acting pretty darn well. That's the iShares, the NASDAQ Biotech ETF, holding just, it's using that nine period, the black line, that 9-period exponential moving average. It's just hugging it. It's trying to hold it very tight. The technicals are not good, but the price is holding. So until the IBB really breaks below 301 to 300, that support area, you have to think, okay, there's a rotation going on here. But when you're looking at an AZO, which is AutoZone, which made a potential peak F at 627.30 the other day after the doji high of 626.09, it went just a tad higher. And that's saying, keep your eye on this. It's been one of the big winners. And the autos, which General Motors came out with really good earnings, and Ford came out with pretty good earnings. They weren't quite up to expectation, but they were good. Look, GM is now down 50 cents. Not a big deal, but it should have been up quite a bit after that earnings report. And Ford, which we had long, we took a 2% loss, I think, in Ford. it's not acting well at all now that it's gone down to the 1481 area, but it's still saying I'm in an M pattern. I should be holding support. I should be trying just to stay in a range between 16 and a quarter and 1450 support. We'll have to watch this really closely. Okay, now when you're looking at a question of the day, we'll look at VRX. Yep, I'm looking at VRX. Hey, I had the leg D, a peak D in the 120-minute and the daily chart. It's trading at 144.32. It made 149.90 high on the 20 seconds. Pullback's kind of in a rectangle formation, and I don't know why I haven't finished the. This is Valiant Pharma. I had done this notation before, so it's A, B, C. C, D, E. It's made a peak E in the weekly, so it's getting a little tight and it's making a potential double top. Got to look at this very closely because there are some stocks in the biotechs that have been really leading beautifully, and now they're getting a little bit tired. So let me just quickly sum up. The anticipated rally that would make just modest highs going into mid to late, well, more towards late January, is what I anticipated. But I made a big deal about two things. One is that the VIX cannot be trading in the 20s, and the 17,600s on the Dow is going to be absolutely imperative to hold. I'd like to say on a closing basis, but we've already gone underneath it. So let's hope on a closing basis. That's one segment. The other is, as long as, the dollar had moved up and the market had moved in parallel motion. So if there's a change of scenery, you've got to wonder why. Now this is leg B, but it's not leg B because the moment you break to the new high and you haven't undercut the initial low bar, this gets changed, and now this is E/B in the bonds, the TLT, and leg E in the weekly chart, right there, and E's continuing in the monthly, and the TLT, which is the Lehman 20-year T-bond fund. The sharpness of this move suggests very strongly that it's B. But I'm just going to play it safe and say for now, we're calling it E/B. But we need to see where it closes today. But the steepness and a closing price towards 129 would suggest strongly that it's probably not E, just as I had to renotate the dollar. So with that said, two things are going on that are really important. One is what I'd say to subscribers, and one of the reasons why I had thought that the Dow would do a little better today, break the downtrend and start to move higher, perhaps even closing higher, and then having a follow-through day on Tuesday, that was based on the fact that I've always talked about the market going down when the VIX is high, but you've got to get bad news. What's happening here is there isn't really bad news, but there's a perception that things are not right, and that's important. It's good. It's good enough to make the market pull back down to 267.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back at a question, an email question early this morning. Would I look at dry ships? Dry ships is what stock we had long. We took half off for a nice profit of, I think, 22%, and then the rest was taken off at a 12% gain. But I was about to get into it, and then I thought, something's wrong with this picture here. And I don't know if I want to get into the shipping area when all the markets around the world, and that's one of the reasons really why we're coming down here. You can't do it alone. The general can't do it without the soldiers. I think that's the way it is. And dry ships is pulling back here. It's down at $1.05, $1.06, and it is down 8 cents. Now, one of the things that concerned me was that the MACD was holding well, but the stochastic was pulling back. He made a very sharp leg A. It seemed to be the characteristic here of the markets in a sense that there was this mid-December rally. It was very strong, and then it gave back a chunk. I don't like it when any chart that I'm looking at gives back about nearly 50% or 50% of the recent gain, and then cannot hold it, and that's what's happening here. So I'm going to have to wait. I'm just going to say, at this particular point, I see a basing area in dry ships. At 0.76 was the low that it recently made. I just don't know if I want to take a chance on a low-price stock in an environment like this because they move very quickly, and it turns out to be, look, it's only down 8 cents, but that's 6.64%. That, it's a big percentage move. So obviously this should not be a big part of your portfolio at all. However, what I would say is that I'm watching it closely, and if we're looking at an entire commodity sell-off, that's one thing. But if you're looking at gold, let me just add this here. I'm moving on. In other words, I'm not going to do anything with dry ships. All I can say is watch how it holds the dollar. If it breaks under a dollar, not good. If it can hold that and start to form some kind of a base there, I certainly might look at it again. Now, gold is trying its very best to move high. It's spectacular that gold has actually held so well without retesting either the low of just a few weeks ago at, this is a continuous contract, of the recent low of the week of the 5th of December at 1141, and hasn't gone under the 1131 low. Of course, if it didn't break that, it didn't break the low of the week of the 7th of November. When the dollar, look at this, look at the comparison. I could pull up the double chart here, but right now I think this is good enough. So let's just go to dollar DXY. Look at that. That's the weekly chart of the dollar, and here's the weekly chart of gold. That's very impressive. And so here's my thinking. My thinking was that we would have a rally in January, not a very big rally, but to modest new highs after this pullback. This pullback now has gone about 200 points more than I anticipated it. So this means that the jury's out completely. We'll have to wait until tomorrow, the next day, before we see if there's even a turnaround here with the VIX up in the 20s. Never expected that. So under those conditions, my thinking was that the dollar was very close to topping out in a short to intermediate term, meaning 6 to 8 weeks rest. In that period, I was anticipating, and this should happen towards the middle, it could start even a little bit earlier, middle of January, gold could start to have this first decent move that where you can see the gold stocks and gold participate, and they move together up nicely for at least, as I say, 6 to 8 weeks. And then we'll see whether or not the deflationary aspect comes back, and we are pulling back. Now, of course, Gartman and a number of others have talked about gold in euro terms, but I don't want to make it complicated. We're looking at gold, we're looking at the dollar, we're looking at the euro. They're all separate as far as I'm concerned. If you want to do that in your trading, that's fine with me. But in the meantime, back at the ranch, I'm just keeping it as simple as possible. The euro should be getting close to some kind of a bounce. But look at this. That's the weekly chart. Nothing there yet except that there's a slightly positive divergence between the technicals and the price going to lower lows. But look at this. That 1.876, no, 1.8756 low that I spoke about back in 2010, that was back in June of 2010. Well, we've made a low so far of 1.18737. It's 1.873. Oh, wait, have we gone below? Wow. Yeah, I think we just took it out. We just took out that low of 1.18756 on the euro-dollar currency pair. So this is really important in terms of stability, price stability, how the bounce comes in, and the chart pattern itself, that large arch formation. Hey, there's a break coming up. I'll be right back. I want to talk some stocks when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So this is what I want to talk about. There is a point where crude oil is telling us about, potentially, about the world economy if you put it together with copper. And copper has been failing. And if you put this together with the markets, the overseas markets right now, and interest rates, just someone sent me just moments ago, yields, Treasury, U.S. Treasury's 2.05 yield, United States, 1.74 Canada, 3.35 Mexico, Brazil, 4.22. Europe, Germany, 0.50. Britain, 1.66. France, 0.78. Italy, 1.75. And that's how it goes down the road. Netherlands, 0.62. Portugal, 2.41. Wow, that's quite high. Greece, of course, up in the 8.96 area, but coming down. Japan, 0.32. In fact, I hear stories in Japan about Japan. It's unbelievable. Australia, 2.77. New Zealand, 3.59. So you're going all around the Hong Kong, 1.79. So what we're looking at here is that up until now, when it came to investments, the stock market was the place that gave the best response, the best result to an investment, at least for quite a while. Number two is that going into year's end, my thinking was that the VIX index was rallying very sharply in anticipation of the fund managers wanting to hold as long as possible their positions. They didn't want to get out because every time they got out, they were wrong. But as the market kept pulling back, so they added to that, thinking, well, I got to have a measured move here. I'm prepared to give up something. And then as January the 1st came in, the year 2015, so the selling came in. Now, I don't know when. Did they buy on the 1st of January, whatever it is? But they held it into 2015, and then they felt they had to sell. And that's kind of the pressure that I thought we were under, and thinking that it was an artificial selling, in that the thrust, based on my weekly charts, let me just go back to the weekly charts. Yeah, I'll look at some stocks, but I wanted to show you something. Based on the weekly charts, was so strong that the selling would be shorter term in the dailies, but the weeklies would hold very well. So far, even with the selling to date, this is still very good action. And I don't want to belittle the action, yet it's only 2 days into the new year. So this is a weekly chart, and the only way I can count it, the only way I can count this based on the Chapman Wave methodology is that this is B. This is leg B was completed last week at 2,093.55. I shouldn't say completed. Will be completed if there's no new recovery high this week. At the same time, you've got this beautiful up channel, which says if you stick to your technical principles, then in this area here, between 2015, and it depends when it is, let's just say it's this week, and 1993, that's where there would be a test of the Chapman Wave inside track buy zone or propellant zone. I didn't expect us to get down there. I just make it as simple as possible. I was wrong. I didn't expect us to get down there, and I didn't expect us anything to do but touch the 2043 9-period exponential moving average intra-week. Well, I guess you could call it intra-week, and then close the week nicely higher. That's my thinking. That was my thinking. I can't do that if the volatility index remains in the 20s. I just cannot do that. That is what I've always said is selling pressure, and you've got to be careful. So I'm trying to talk out loud where my mistakes are, where I've been right, where I've been wrong, and what would constitute an even bigger mistake. We're looking at an option that we got that is up from 155 to 275 right now. A put option of the remaining little bit that's left in it. I'm looking at the short position acting poorly. That's what we want. I'm looking at our long positions, very select two stocks that have done really well, still holding quite nicely today. Big percentage gains so far. I don't want to really give that up, and yet at the same time, I really think that these are longer-term holdings. How do you deal with that? And I think I'm going through the same thing that the fund managers were going through. And what were they going through? They were saying, I would like to hold. I'm not trying to be greedy. I'm just trying to say that up until now, this particular area or stock or whatever it is has done very well. And every time you got out, you're rewarded by having to pay up to get back in. So you were not rewarded at all. Is this a time that is different? Hey, we'll see, because if it's that pattern that I call that double, that M pattern, lowercase m pattern, that says, whoops, this is the failure in the weekly that you really have to watch out for, then the S&P is going to crack 2,000 very, very soon. But if not, we will see by Tuesday or Wednesday a stability that says the United States market is still the place to be, and as a direct result, the support levels will hold. So here we are. I had a question before, an email saying, where are the supports in the S&P? Where are the next supports in the S&P? And my impression was that very strong candle of the 18th of December, starting at 2018.98, I don't want to even get to the bottom of that. The rally has to start right this minute as we're talking, and you have to close the day with the Dow down only 65 or 68, something like that. The S&P down maybe 1.5. maybe 2 points. That would be very important. But I'm not going to deny that when I looked at the XLF, that was just not a great pattern in the daily chart. And yet, let me show you over here. This is the financials. And yet all it's doing is trading within a range at this particular point. And the reason why I was anticipating that it would go higher is that there's no other wave count than other. This is a leg B and perhaps a peak B this week in the financials. And that if there is a pullback, there should be tremendous support inside this candle above 24.10 to 24.05 on the XLF weekly chart. And that by the end of the week, we should be above the 9-period exponential moving average, which right now is at about 24.40. And the price of the XLF is at 24.30. So that's what I was looking at. And I had no signs in the monthly charts. There were hints, but hints are not actions. Those the price performance of the weekly charts that I'm looking at. Look at this for the Dow. I have 2 indicators that are suggesting to be careful, but the majority of the price movement and everything else says. So far, the MACD is acting well, even though it might cross negatively. Right now, the MACD is at, let me just read it, 1012 over 998. Still good. And the stochastics at 93%. Very, very good. Something's going on here. And it's this rotational correction. And there is nervousness, and there's a right to be nervous if the European markets are tanking, the Japanese markets pulling back. Look at this Nikkei continuous contract. It had a spiral to the upside going to 18,205, plunged to 16,525 on the 16th of December. A beautiful rally. Maybe 7/8, and then it pulls back sharply. And today's candle is not the candle you'd like to see. Not a good candle. But I do have an alternate count in the weekly chart. But we'll see what happens, because that's a Roman candle right there. And if the Nikkei continuous contract, if it goes underneath 16,950, it'll probably retest the low. So I'm looking at them and say, okay, show me what you want to do. That's all. And let me go back to something here. If the IYR, which is really a defensive area, acting quite nicely here, 24 up 24 cents, 78.03. This is the IYR is the iShares US retail. It's a REIT ETF. Mostly commercial real estate. There's that big candle in the monthly chart. I'm going to watch this real closely because it's a defensive stock, and this is the kind of thing I was looking at. Made a peak C in the weekly chart, and it needs to go above 79.13 to start leg D. Excuse me, just had to lubricate the throat. So that's the IYR. What about the IYT? Oh, this is what I want to bring us to. The IYT is having a high-level consolidation. That's the iShares Transports. Possible peak F/B in the monthly chart, F/A in the weekly chart, and an A failure so far, possibly in the daily, but highly influenced by the XAL, which is the airlines, which has an alternate count, peak F/B in the daily. But this is the issue right here. The weekly chart, here again, I've counted this 200 days to Sunday, whatever the expression is. I don't see anything wrong. And crude oil's pulling back. MACD is good. Stochastic's very strong at 93%. The airline index should go to at least a D. If it does that, it should help the market, the general market. So I'm going to give the levels, and I'll give them over and over because I need to do it just your sanity and mine. When you've got Google pulling back and saying, I've probably made a peak, a hat trick top in the monthly chart and the weekly chart, I'm just so far I've made the H pattern, but I haven't broken down. But 543 would be really hard to achieve at this particular stage and hold. If I do that, that's good. That's becoming an M pattern. I'm down 5 at 519, down just 1%. But I'm not really going anywhere. Amazon. Over the weekend, I looked at it and thought, hey, these patterns are all repeating. Look, there's the H pattern. It's about to test the uptrend line. Apple's not acting all that well. I'm sorry, Amazon is not acting all that well. That's the weekly and the monthly. Look at Apple, AAPL. Apple, same thing, probably a hat-trick top in the weekly, the monthly and the weekly charts. Look at Priceline, PC. These are all the big winners. Same thing. So the rotation is going on, and that rotation is absolutely imperative to monitor. And thank you, Steve. So as I'm looking at it, I'm saying the weight of evidence thus far is still suggesting that even though I'm looking at very limited upside, there is a potential for the upside. And I'm not... What's exciting about this phase is not getting it wrong. That's never great. But what's exciting is that there are, in fact, at this particular point, certain stocks that look very weak, and you can short them. And there are certain stocks that are looking very good, very strong. And you can go long on those. So let's say we've got a caller. We've got Dan in Baskin Ridge. Dan, how are you?
Doing well, Basil.
Good.
Hey, Basil, I flipped from the TVIX into the XIV today at about 30 on the XIV, and I also got the UDOW at about 137. And I wanted to see what your thoughts are on some stops.
Okay, so let's do the one thing at a time. What the XIV is, folks, it is not an IV that you plug into your arm. It is the VS Inverse VIX Short-Term ETN. It's making the pattern in the monthly chart that is so similar. Charts these are fractals. These are patterns that repeat over and over because it's human nature to repeating over and over. And it says that this ETN, not an ETF, an ETN, has the inverse effect of the VIX. When the VIX is rallying, this thing's going to go down. When the VIX is going down, this is going to go up. So this essentially maps, and it's fascinating because I'm going to explain something in a moment. Well, at least I won't explain it. I actually want the answer to it, but I will elucidate on what's going on. This VS Inverse VIX Short-Term ETN trading at $29.98, down $1.76, trading at 30, trading $29.99, trading at 30. This is the way it's going right now. It's just moving around, 298, 297, 296. So this is a very interesting thing because the pattern that we're looking at says that if the Dow and the S&P went to all-time highs, how on earth did this fail to make a new all-time high when it made its all-time high back in December the 5th? At 40.74, and then it made the H pattern. And I think that has to do with the dilution, that has to do with the way it's reconfigured. That's the only way I can figure it out, but my real analysis says, and I haven't been able to do it, is that the mix, the weighting of the XIV is dependent on on all the Dow stocks moving in concert, and they weren't, and that's why it didn't go to an all-time high. Folks, we're going to be back with Dan, who's in a nice position, I think, right now. We'll talk about it as soon as we get back. We'll be right back. Dow's down 236.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're back. Got a question from Paul. Good to see you, Paul, the other night. Wants to know, could you please mention the surge in the VIXs today? Yes, and that's exactly what we're talking about. So what we have is we've got Dan in Baskin Ridge, New Jersey, who switched from being short, fantastic switch. What a beautiful piece of timing, even if it isn't exactly the low. You held on, you did exactly the right thing. Beautiful. So now what I'm going to say to you is, based on my 120-minute chart, the volatility index is suggesting in leg E that there should be a pullback in the VIX. If there's no pullback, in other words, if the market by 2 o'clock this afternoon is just refusing to rally and to go to Dow minus 30, it's Dow minus 234 right now, S&P minus 26. If there's not minus 13 in the S&P and then minus about 110 or 100, something like that, just about minus 100 or better even by 1:30 or 2 o'clock, that's a problem. But as I see it right now, there's a real good chance that the VIX going from 20.32, the high today was 21.15. That's very high. But pulling back towards the 19s, especially if it breaks 18.89, the 9-period exponential moving average on the 120-minute chart VIX index, that would be a really good sign to say, hey, the selling has been intense. It has been part of the selling that has occurred with the Friday action where the captains were away and basically the seventh mate and the chefs were running the ship. And their charter is to just do whatever the S&P does. Nothing worse, nothing better. Just stay with that. So today got the follow-through. It's still the best market around the United States. And all I can say is that in timing, I think that let's see, XIV. Oh, boy, it's going to be tough because I don't see the actual bad news. That is the news that's a headliner right now. So Europe's bad, but that's not usually what you need is something. Inflation, deflation. You need a word. You need something that's very important. So at this particular point, I'm looking at this, and I think that you might have timed it beautifully, at least for the start of the basing formation. Now, you know that on the left, on the 17th, the low was 28.83. I don't know if you want to make it I'm suspecting if it goes to 28.83, it's going to actually go lower. So I don't know if I don't know where you want to put your stop in. So you work out what you're very comfortable with in terms of the stop, but it's actually the upside that is the issue. So you want to see trading at 29.97, down $1.69. Well, trading at 30. You want to see it closer. In every hour, it should move up between 15 and 25 cents at the least. Not down, but up. And if it's able to do that, and by 12 o'clock. I'll be doing Daryl's show at 1 o'clock after Larry Pesavento does his show in this coming hour. So I'll follow up on that. But in the meantime, you want to see by the early afternoon session, 30.40 on the XIV. And then I think you're starting to look way better. But it's a great switch. I wouldn't take much of a loss. You can always get back into the XIV. Now, what was the other one? It was XIV and?
UDOW.
And the UDOW. Okay, well, it's exactly the same thing. So the low of the day today should not, I would go, that should be a penny below should be your stop in the 300% along the Dow. So, hey, nice position playing, nice attempt at picking the low. I think you've got a good chance that there's a bounce from here. How the bounce carries is going to be really important. Nice going, Dan.
Thanks, Basil.
And thank you for calling. So, folks, I'll be doing the Diagnostic Trading Hour. That's coming up at 1 o'clock Eastern Time. Right now, you've got Larry Pesavento. It should be a wonderful show, as always. Just dying to hear what Larry says about gold at this particular point and the dollar. Basil Chapman, my service is the opening call, and I will be back in an hour. Otherwise, see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.